SBI Mutual Fund unveils SBI Quant Fund. SBI Mutual Fund on Tuesday announced a multi-factor quant fund targeting four key factors: growth, value, quality, and momentum. Growth stocks exhibit high earnings growth, while value stocks are undervalued. Quality stocks show high returns on equity, stable earnings, and low debt. Momentum stocks are selected based on a price performance. SBI Mutual Fund choose this multi-factor strategy for its ability to combine the strengths of multiple factors, potentially offering better returns compared to funds focused on just one factor. This approach aims to create a more diversified and balanced portfolio. The scheme aims to generate long-term capital appreciation by investing in equity and equity-related instruments selected based on an in-house quant model. The fund's benchmark is a BSE 200 TRI. According to the fund house, the model will identify stocks as momentum, value, quality, and growth based on data. Launch period. The new fund offer opens on Wednesday, December 4, 2024 and closes on Wednesday, December 18, 2024. Strategy. A multi-factor active fund focusing on momentum, value, quality, and growth using an objective rule-based approach for portfolio construction guided by an in-house quant model. Portfolio allocation. Primarily invest in equity instruments selected using a rule-based quantitative model along with other permissible securities for diversification. Benchmark BSE 200 TRI. Fund managers. Sukanya Ghosh and Mr. Pradeep Keshavan, dedicated fund manager for overseas securities. Factor-based investing. This involves selecting securities based on certain characteristics or factors that historically linked to higher returns. This is the first ever quant fund by SBI Mutual Fund, which manages assets worth rupees 11 lakh crore and marks its entry in the quant space. Relying on a single factor for investment can be risky due to market cycles as no single factor consistently outperforms. SBI Mutual Fund's new multi-factor strategy aims to balance the strengths and weaknesses of growth, value, quality, and momentum factors to reduce risk and enhance returns. The fund will invest in the top 200 companies by market capitalization, with stock selection based on these four factors. It will be large cap and mid cap focused with a benchmark against the BSE 200 TRI index. 80 to 100% of its asset in equity and equity related instruments selected based on a quantitative model with the balance assets as per following allocation: 0 to 20% in equity and equity related instruments of companies other than above, 0 to 20% in debt and debt related instruments including securitized debt up to 20% of the debt portion of the scheme and debt derivatives and money market instruments including tri-party repos, 0 to 10% in units issued by REITs and INVITs with the exposure in line with SEBI limits specified from time to time. The scheme shall invest in units of mutual fund schemes including domestic and overseas ETFs up to 20% of the net assets of the scheme. The fund may also seek investment opportunities in foreign securities including ADR, GDR or foreign equity. Overseas ETFs and debt securities subject to regulations. Such investments may not exceed 35% of the net assets of the scheme and will be in line with the maximum limits available from time to time. For more details on asset allocation, please refer to Scheme Information Document. Multi-factor investing combines various factors rather than focusing on a single one, helping to smooth out the cyclicality of returns and reduce behavioral biases in factor selection. Our SBI Quant Fund, based on an in-house multi-factor model incorporating momentum, value, quality and growth factors, provides a strategic opportunity for investors to diversify their portfolios with an aim to achieve superior risk-adjusted returns, said Nandakishore, Managing Director and Chief Executive Officer of SBI Funds Management Limited. The algorithm will decide the weights of the four factors: momentum, value, quality and growth, depending upon the relative performance. The weight of the better performing factor will go up with time at the expense of other factors. However, the allocations will be brought back to equal weight of 25% each once the weight of outperforming factor reaches the upper band 35%. The rebalancing can also be triggered by the worst performing factor if it reaches the lower band of -8%. The SBI Quant Fund is for those investors who believe in the India growth story and want to invest in equity with the benefit of periodic reviews through a rule-based investing framework. By integrating established equity factors, each with a distinct risk or return profiles, the fund aims to deliver optimal risk-adjusted returns and minimize behavioral biases. The SBI Quant Fund utilizes an in-house multi-factor model incorporating factors such as momentum, value, quality and growth to optimize performance across various market cycles, said DP Singh, Deputy MD and Joint CEO, SBI Funds Management Limited. So thank you for listening. Thank you for watching. Bye everyone.